comes IS 40, which is investment property. It's a short standard. We will finish it in very later time. Investment property is also your non-current asset. Investment property is usually a property, land, or building, or both, which is held by the owner or by the lessee under a finance lease to earn rentals or for capital appreciation or both, rather than for using in the business or in the ordinary course of business or for sale. Listen, what does that mean? I'm not sure if I explained this thing to you before or not. If I discuss that, what you should remember that let's suppose that you purchased two offices, one on the 10th floor of a building and one on the 12th floor. And then you invited me that, sir, come and see, these are I purchased two properties, I purchased two offices. I say, what are you going to do on this office? You say, the 10th floor office, I will open up my audit and consulting business. And this office I'm going to use, I'm going to operate from here. And I'm opening a consulting company. This will be my office. And I say, what do you do on the 12th floor? And you say, from 12th floor, I just purchased it. I don't need it now. I will I will give it out on rent, or maybe I will keep it that tomorrow the prices will go up and I will make capital gain. So this 12th floor office, you are not going to use in your everyday business. That is called investment property. So now you've got two offices in the same building, maybe of the same size, maybe at the same price, but their accounting treatment will be different. The one on the 10th floor, which you are going to use, will be considered as PPE, property, plant and equipment, under IAS 16, and the one on the 12th floor, which you will not be using in the regular course of business, that would be treated as investment property. So it is also a non-current asset because it will give some benefit. So I still call it my non-current asset, but I don't call it my tangible non-current asset under IAS 16. Am I clear? Because for tangible non-current asset, the condition is, for IAS 16, the condition is that the asset must be used within the ordinary course of business for the production or supply of goods or services or for administrative purposes. And what you remember that in IAS 16, you charge depreciation. But for investment property, you do not charge depreciation. Preferably, I'm using the word preferably. So the office on the 10th floor, I will do depreciation, but the office on the 12th floor, which I'm not using, I will not be charging depreciation for that. Preferably, I'm using the word. So this is the background. Now we see what does it says. An investment property is recognized when and only when, again, the two conditions. If you remember, I told you that all of these standards which are related to assets, the recognition criteria will be two. Number one, that it is probable that future economic benefits will flow into the entity. And number two, that you can measure the cost reliably. So if the cost can be measured, and if the, how to say, future economic benefits are probable, you recognize it. Okay. Then we move to the next thing. Measurement at recognition. So again, like all other assets, we talk about, how to measure it. So at initial measurement, like initial measurement and subsequent, you've got two types of measurement, initial and subsequent. Your initial measurement will again be at cost, just like in IAS 16, the cost model, which means whatever you spend until it is ready for use or whatever. So purchase price plus any other direct expenses which you incur. This is, it comes into your initial cost. You call it initial measurement. Measurement after recognition. After recognition means subsequent, which means end of the year. So here again you have two things. Just like in IAS 16 you have two things, cost or revaluation model. Here again there are two things, but there will be some difference. So there is a choice of accounting policy which must be applied to all investment properties held by the entity. One, the cost model. So the investment property is carried in the financial statement at cost less accumulated depreciation, etc., just like in IAS 16. But this is not preferable. In IAS 16, cost, you can do cost, you can do revaluation. I give you 50-50 opportunity. But in investment property, cost model is available, but it is not preferable. You can treat it as IAS 16, but that is like your last choice. Preferably what you do, you should be doing it at fair value model. You should be doing it fair value model, the market value. The investment property is measured at fair value at the end of each reporting period. Any gain or loss in the remeasurement, like last year my fair value was 100,000, the market value was 100,000. This year the market value is 20,000. I treat it as my gain or loss. And the difference is that this gain or loss will go to the P&L. Now, this is what you should pay attention. Any gain or loss should go to the P&L part. You remember in IAS 16, we take it to OCI. Gain or loss on IAS 16, we charge it to other comprehensive income, the lower part of your income statement. But on investment property, if you make gain or loss, it goes to the top part, the operating part. It goes into the P&L part. This is the difference which you should remember. So what you should remember, ideally you should have an investment property, don't charge depreciation. Keep it at fair value. So throughout the year, you do not charge depreciation, you sit down. End of the year, you measure it. If there is any difference from last year and this year, charge it to the profit and loss part, not to OCI. This is suggested, recommended, preferential way of doing it. If you don't want to do it for some reason, then you can use the cost model. So cost model here is not like a preferred thing. So this is some question here. That's all. You may ask me that why do we take it to P&L part? This is a question you should be asking. That, sir, why we are taking it to profit or loss for the period, and why the gain or loss on IAS 16 we charge to OCI? There should be a reason. I mean, why they are making that difference? Is there some reason for that? Yes, there is. Because this investment property is something which you did not want. Now remember, the profit and loss part, which is the top part of the income statement, like you have a line called profit before interest and taxes, PBIT. After that, you pay interest, you pay tax. So PBIT and above is called operating part. From PBIT, profit before interest and taxes, and above until sales. That is called your operating part. That part is management's performance. That part is a result of management's decision. This is what I said. I will explain you next time the structure of income statement. How income statement has been divided, and where do we show the revenue and other things. Anyways, so this thing, which you make a gain or loss on an investment property you never needed in business actually. You had got a cash in the bank, 100,000. It was management's decision. let's take out cash from the bank and purchase the office on the 12th floor because the market prices will go up, and let's make some gain. So that was clearly a management's initiative, and therefore it will be shown in the P&L part, which is the reflection of management activity. The non-current assets, and plus you may sell this asset now. So it is your operating activity. But if you talk about the non-current asset under IAS 16, the gain or loss is shown in the OCI part because it is unrealized. You are not planning to sell the asset. Although the value has gone up, but your purpose is not to sell the asset, your purpose is to use the asset. And that gain is unrealized. You are not selling it. So it goes in the second part, which is called OCI part. Are we clear on that?
Yes.
Okay, so from investment property, you will not get a very long question. What type of question they may give you, and they will give you probably. They will tell you that a company has some office from, you have an office which you were using,